This video explains the 2026 to 2027 tax treatment of petrol and diesel cars and vans. It starts with the business type and whether the vehicle is legally a car or a van. It then covers sole trader claims, company car tax, diesel rules, private fuel, and company vans. Finally, it shows the full business and personal tax cost to compare before choosing. When a petrol or diesel vehicle is used in a business, the tax result depends first on the type of business and second on whether the vehicle is legally a car or a van. The examples in this video use the 20% basic rate and 40% higher rate, applying in England, Wales, and Northern Ireland. Scottish taxpayers should use their relevant Scottish marginal rate. Employer Class 1A national insurance is calculated at 15%. For a sole trader or an individual partner, the owner and the business are not separate for benefit-in-kind purposes. Private use of the business vehicle does not create a company car or company van benefit for the owner. Instead, the business excludes the private element of the expenditure it claims. The business will normally use either the actual cost method, restricting costs for private use, or simplified mileage where the conditions are met. For 2026 to 2027, simplified mileage for cars and vans is 55 pence for each of the first 10,000 business miles and 25 pence for each business mile after that. The mileage rate covers the general cost of owning and running the vehicle, so those same costs cannot also be claimed separately. When actual costs are used, a car emitting more than 50 grams of CO2 per kilometre normally receives the 6% special rate writing down allowance. A car at 50 grams or less normally enters the 14% main rate pool. Vans are normally treated as plant and machinery and may qualify for the annual investment allowance, subject to the normal conditions. Private use restricts an unincorporated business claim. A limited company is legally separate from its director or shareholder. If it provides a car that is available for private use, including ordinary commuting, the director or employee is normally taxed on a benefit in kind. The starting calculation is the car's tax list price, including taxable accessories, multiplied by the appropriate percentage for its official CO2 emissions and fuel type. The list price is used rather than the discounted price the company may have paid. Take a petrol car with a tax list price of £40,000 and official emissions of 130 grams per kilometre. For 2026 to 2027, the appropriate percentage for 130 to 134 grams is 32%. The taxable car benefit is therefore £40,000 multiplied by 32%, which equals £12,800. A basic rate taxpayer pays £2,560 in income tax. A higher rate taxpayer pays £5,120. The company pays Class 1A national insurance at 15%, which is £1,920. Where an emissions-capable company van is available for unrestricted private use, the 2026 to 2027 taxable van benefit is a flat £4,170. The income tax cost is £834 for a basic rate taxpayer, or £1,668 for a higher rate taxpayer. The company pays £625.50 of Class 1A national insurance. The calculation does not depend on the purchase price of the van. If private petrol or diesel is also provided for the company van, the additional 2026 to 2027 van fuel benefit is £798. The employee pays £159.60 at 20%, or £319.20 at 40%, and the company pays £119.70 of Class 1A national insurance. The normal van benefit can be nil where use is restricted to business travel and ordinary commuting, with only insignificant additional private use. The actual working arrangements, vehicle use, and employer policy must support that position. For a diesel car, check whether it meets the Real Driving Emissions Step 2 standard, usually called RDE2. A diesel car that meets the required standard normally uses the petrol equivalent percentage. A diesel car that does not meet it is normally subject to a 4 percentage point diesel supplement, capped at 37%. Using the same £40,000 list price and 130 grams per kilometre, a non-RDE2 diesel uses 36%. The benefit is £14,400. The personal tax is £2,880 at 20%, or £5,760 at 40%. The company's Class 1A national insurance is £2,160. Company-paid private petrol or diesel creates a separate fuel benefit unless the employee fully reimburses the private fuel under the rules. The charge is not based on the amount of fuel actually used. For 2026 to 2027, the car fuel multiplier is £29,200. Using the petrol example at 32% gives a fuel benefit of £9,344. The employee pays £1,868.80 at 20%, or £3,737.60 at 40%. The company pays £1,401.60 of Class 1A national insurance. This is why employer-paid private fuel can be poor value unless private mileage is very high. For a tailored review, contact ABC Business Services. You can speak directly with a member of our team, email us to arrange an appointment, or visit our website for more information.